Good morning, everyone. This is Pat Nicholson with HDCS. Welcome to our webinar. Are you ready for safe banking? We appreciate your time and attention, and we respect your time. So we're going to get rolling. We have a lot of information to share, and we anticipate we'll have some more people joining as we go. So I'm going to turn it over to our CEO and founder, Andy Montgomery, to lead you through the information. We're going to go straight through so that everybody can hear the information we have to share. And then at the end, we're going to do Q&A. So we promise to finish within 30 minutes, but we're willing to stay beyond 30 minutes if there's a lot of questions. So with that, I'll turn it over to Andy.
Good morning, everyone. Thank you for joining us this morning. As Pat said, we're going to talk about safe banking and cannabis legislation overall and what that likely means for both financial institutions that are want to bank cannabis or are banking cannabis and those that don't. 35 states have some form of legalization, and so we think that this is going to impact all financial institutions in those states. So who are we? We're HDCS, which stands for Higher Risk Deposit Compliance Solutions. We are a company that is designed to help financial institutions take on higher risk depositors by helping them build the infrastructure and the compliance framework they need to safely do it and stay out of harm's way with the regulators. I'm Andy Montgomery. As Pat said, I'm the founder and CEO of HDCS. I come from a background in the banking industry for 25 years. That background included founding a couple of community banks and running those as CEO, and then being one of many CEOs for a large multinational bank. So I've spent a good portion of my career developing banks and building them from the ground up, sitting across the table from regulators, have had interactions over that period of time directly with regulators, went to all the roundtable meetings, met with the heads in Washington, D.C., have lobbied also on behalf of the ABA for various different things. So that's how we came to this, is from a banker's approach, trying to de-risk and make it easier for financial institutions to get into higher risk depository businesses. On the call also is Pat Nicholson, who is our Chief Revenue Officer. Pat is a former Apple computer executive and a fintech, multi-fintech company executive. And Becky Poster is on the call with us. She has also got a long, distinguished career in banking, having really done multiple different jobs and multiple facets in the banking industry. Chris Ganias is not on the call today. He has spent his career building BSA, AML programs for banks, money remitters, a Western Union, you name it. So he's got subject matter expertise in that and help build our program. So we're going to talk about pending cannabis-related legislation and prospects for passing. What we view can be anticipated in the regulation that follows, what will be required for banks or financial institutions that want to bank cannabis, and what will be required if you don't want to bank cannabis. So let's talk about what's happening with cannabis legislation. There's a lot. As you can see, there were almost 1,600 cannabis-related bills in state and U.S. legislature last year. This year, we're already up to 400 new cannabis-related bills that have been introduced in state legislature or Congress. So we are going to see a continual change in the legislative framework. And there's also a lot going on the local level. So there's local law changes as municipalities and local governments learn about cannabis, what to do, what not to do. There's state law changes. And so it can be pretty overwhelming to stay up with this. But what we'd leave you with is that as an institution, you need to pay attention to those laws and changes. And there's organizations like ours that can help you understand how the impact of those. But you want to make sure that if you enter the cannabis space, you do it only with legal and compliant cannabis companies, and they don't start out legal and become illegal because of changes in the laws. the two main federal laws that are being considered is the MORE Act, which passed in Congress at the end of last year, largely on a symbolic vote. And what that does is decriminalize is marijuana nationwide. It moves it from a controlled substance, and that basically opens up the canopy for cannabis to be able to operate in all 50 states. So they'll be governed by the laws of the states and the local municipalities. We believe that this has an uphill climb in passing in this Congress. It could pass because it's part of the Democratic agenda. Kamala Harris, our vice president, introduced it in the Senate, this bill. So she's got a personal stake in this. But it's going to resolve various different regulatory concerns and law enforcement concerns in order to get passed. So I would give this 50-50 at best in this Congress. It all depends on what deals are worked out. And we do believe that Republicans are likely to filibuster this act. The Safe Banking Act is another thing altogether, and that's why we're talking about it today. With the change in leadership in the Congress and the White House, we believe that safe banking is inevitable in the near-term future. And there are various different things, pressure points, forcing actions that are going to influence the passage of this in the House. Law enforcement is behind it nationwide. So the attorney generals have spoken up for it, state treasurers because of the need of taxation. This is a regulating function of the cannabis industry. So it will have bipartisan support with Republicans. They're unlikely to filibuster it. We believe all 50 Democrats and independents will support it. And even if the Republicans did filibuster, there were the votes to pass this in the last Congress, and there remains the votes to pass this in the last Congress, even from some pretty conservative senators, because it will pass in the House. It's passed 3 times in the House. It will pass in the House, but the conservative senators will join this because it's a way to create some tax revenue and regulate the industry. And the voters have already spoken on this. Virtually every cannabis initiative on the state ballot have passed last year, and there will be more this year. And so voters are speaking out, wanting cannabis. They want the tax revenue. And obviously tax revenue is very dear right now.
Great. And Andy, do you want to talk a little bit about what the bill does specifically?
Yeah. Sorry about that. Good point. What the bill basically does is prohibits federal banking regulation from penalizing depository institutions for providing services to cannabis. So there can be no enforcement actions for banks or credit unions that go into the cannabis space. What this will do, this is the forcing function for FIFIEC, which is the joint body of regulators to write the rules and regulations federally governing cannabis. So we've been without a real body of regulations governing banking of cannabis, which have left many banks on the sidelines because it's hard to comply with rules that haven't been written yet. This will change that. And we think that the regulators, the FDIC, the OCC to some extent, certainly credit union, NCUA, they've already been thinking about this and planning. And there's some state regulation that has occurred. There's enforcement that's been occurring on the state level. So they've been able to watch the state regulators and learn from those regulators. So we don't think this rule writing process will take a tremendous amount of time. We think there will be guidance pretty quickly here. So what does that mean? It's a game changer for the cannabis industry, certainly, because more institutions will enter the space and cannabis businesses will have something that looks like a more normal banking relationship than they've had. We also believe, as is happening in Canada, that traditional payments providers will enter the space. The Visa, the MasterCard, certainly PayPal has indicated that they intend on doing it. We also believe that regulation on banking cannabis will increase significantly. And what the regulators are going to be focused on is enforcement, keeping the illegal businesses out of the banking or financial services industry and keeping the illicit transactions from staying out of the financial services industry. So, why this helps law enforcement is because if you have legal and compliant cannabis inside the banking industry, it's easier to focus on the illicit trade because it's operating in cash. So we believe that the regulation is going to be built with enforcement in mind, and the penalties could be severe for banks that don't do this the right way or do it on an ad hoc basis, because we know that as bankers, financial institution executives, we have a mandate to not bank illegal businesses and not um, allow illegal funds to enter the financial services, the regulated financial services industry. So the whole body of regulation written around that is clear. And I think with the existing regulation that's out there, we'll talk a little bit about that, you'll see the enforcement, the regulations, the rules written around that. So what does that guidance look like? The first thing I want to talk about before we get into potential guidance is there are 35 different state laws, 12,000 municipalities, all with their own laws regarding cannabis. There's the rescinded Cole memo, FDA and USDA guidance surrounding either edibles or hemp. So that's some of the framework. There's the FinCEN guidance, and then there's state banking guidance. What the regulators are going to do is incorporate all of that and including best practices to what they see. With, again, there's two focuses: is keep the illegal businesses out of the financial services industry, and the illegal transactions. So that's what we believe the regulatory guidance is really going to be strict about. So a good reference point for those of you who have not looked at this is the strongest state guidance. We believe California DBO, which regulates the state financial institutions. This is what is in their guidance. You can look at various different things. If you're in the cannabis industry, you may have covered this. Some, as we see, there's some blind sides that you probably are going to need to address pretty quickly, more quickly than you might think. But the ongoing monitoring, audits, and inspections is critical to this, to understand the cannabis businesses and what's going on inside of them. There are, we all know that there's a lot of illegal cannabis in the marketplace. It dwarfs the legal cannabis, which ran about 20 billion through regulated financial institutions last year. The illegal trade also ran a considerable amount through financial institutions. And some of the cannabis businesses we know for a fact are maybe 80% legal, 90% legal, and then still have illegal trade because that's how they stay competitive. So when you consider going into cannabis, you have to have a framework that is really going to deal with that. And we can talk about the strategies for doing that. You should think about technology, where it comes in place. The three elements of building a comprehensive cannabis approach is building the right foundation. Don't start off with an ad hoc program and figure it out along the way. We really recommend that you go through with an intention and address these things, so that you're ready when the regulatory guidance comes into place and your state regulators or federal regulators have specific guidance to focus on. So that foundation and thinking about it is critical. Thinking about how you're going to scale it and not put a hole in your staff is critical. Then the other part of that, the next part of that is screening. And this is where it's critical to vet the cannabis related businesses, attract the right ones, and make sure you put them through the enhanced due diligence that's required. And you've got an audit program with them so that you only have legal and compliant cannabis. This also is critical to understand the state and local bodies governing cannabis and what it means for every one of your geographic areas where you might bank cannabis. Then the monitoring becomes, and this is where we see, a lot of financial institutions not devoting enough time, is the deposit verification, the flagging of anomalies. What we believe the guidance will say is that the institution needs to reconcile against the seed to sale or track and trace programs of the cannabis related business. And that's the way you'll see any anomalies out there. There are great technologies that allow you to do this. There are other ways to do this effectively without blowing a hole in your human resources and your financial institution. But we believe you're going to have to do that, and you're going to have to be able to demonstrate to the regulators that you're following the transactions of the cannabis-related business as through the system, and being able to identify any anomalies, investigate those anomalies, and then leave a copious track record for the regulators that you've made the appropriate determinations and decisions. So these three approaches are critical, we believe, in running a cannabis banking program that is going to survive regulation when it comes.
Hey, Andy, real quick, before we move off this slide, could you, in the foundational phase, there's updating policies and procedures, your enterprise risk management program, but can you elaborate a little more on like what an operating plan, what the key considerations are?
Yeah, the operating plan is really how you're going to execute it safely, stay compliant, avoid the risk, and do it consistent with the needs of your institution. So, for example, we would suggest that institutions don't take cannabis deposits over their retail counters, that they have an alternative approach to that. They don't even have to take possession of the cash, but those are all things that go through an operating plan. We help institutions do that for free, to create that operating plan. They may or may not use us after that, but coming up with that foundation plan to think through how you're going to do that. Training is critical because cannabis is different. There's no other industry where the illegal business sits right besides the legal business in the United States, and it's really hard to tell the difference between the two. So you're going to want to have training at all levels, certainly in your front line that's dealing with cannabis, to be able to distinguish between the legal and the illegal, through your management all the way up to the board as part of your BSA ML program. So we've got a training curriculum that we can recommend for your institution, but it's critical that everybody understands the unique nature of cannabis and can distinguish the risk. We partner with a couple of different technology partners. So what we do is put the framework in at HDCS of the cannabis for financial institution and serve as an extension of their staff. So they don't have to build all the internal resources and subject matter expertise. We've got subject matter expertise in both banking and cannabis. But we partner with NatureTrek and Simplifia. And what NatureTrek does is they monitor and address the deposits flowing from the cannabis business all the way from the seed to sale, and then will prompt you at every step for something that doesn't look right. Notifying you, alerting you, then you take action as an institution, and they will keep an audit record on their system, and including the files on their system. So when the regulators come in, it's pretty easy for them to see how you're managing the program and demonstrate that you're managing it safely. Simplifia is on the front end with vetting. So they have been in the business for quite a while and have multiple cannabis businesses under their belt. And so they help with the vetting because they have understand all the law, local law and state laws, and have an auditing program for those cannabis businesses. First on vetting them just to make sure they're licensed and doing background checks and all of the necessary things there, but also putting them through audits so that they are complying with all the state, local laws, FDA requirements, if that's what's required. So the reason we put together this partnership is to solve the problem for institutions from onboarding all the way through monitoring to setting up the program. So it's also critical because we think the regulation is going to increase, and a lot of banks that have done test programs are probably going to have to build those programs up and put some money behind them or exit the business. But they're not going to be able to go halfway into this business once the regulatory apparatus is added. So the first thing when building a program, you really have to say, how do we make it sustainable from a profit standpoint? Because this should, if you're going to take the additional risk, you should earn a profit that makes that risk worthwhile. So, and you're going to have to, as we said, build up the infrastructure, not just stick a toe in the water here. So that means you have to invest in some form of subject matter expertise and people, technology, either internally or outsource it. And there's ways to effectively do both. We think it's more cost effective to really look at outsourcing solutions, but every bank's got his risk appetite in terms of that. But there's ways to make it very efficient if you do outsource, but you're going to need to build up that right infrastructure. And every institution that we have come across that has scaled the program has had to scale up one way or another. They've had to build up a lot of staff or they've had to outsource because it becomes overwhelming if you don't. So you've got to get paid for that risk. And giving away cannabis depository service is probably not sustainable because your costs could escalate as the regulatory requirements. So there's a balance between making it sustainable for cannabis related businesses and your financial institution. There's typically three things that we see financial institutions charge the cannabis related businesses for. One is the enhanced due diligence. That's the vetting to make sure that they're legal and compliant. You know who's behind the business, how they're operating, do initial audit. Should absolutely charge for that. And then some financial institutions charge monthly fees. Some take a percentage of, or charge a negative interest rate basically on the deposits. So instead of being free with earning credits, there's a charge that's based on the percentage of deposits. We believe that approach is most likely going to be more commonplace as the regulation increases. But again, you need to think about how to drive profit from this while managing risk. And this is where the BSA compliance risk folks can really be part of being a profit center for the bank. They are all the time, whether they're recognized or not. For doing it, this is where if you drive the right risk parameters, which includes creating a sustainable return, and cannabis businesses will pay for it. That's where I think that the risk people can really add a profit contribution directly. We believe the shape of a successful program is you're going to have the costs up front, but you want to scale it. You don't want to do it a little bit because we believe the regulatory requirements will make it too costly for you to just bank a handful of accounts. Maybe they won't, but I'm not sure you're getting the return from doing that. So I think it's sort of a situation where you need to say we either are in this business or we're not going to be in this business. But I don't think you're going to be able to just stick your toe in the water and not put a infrastructure around being in the business. Then the other side is preventing cannabis. So there's most institutions still don't want to bank cannabis and won't for the foreseeable future. However, we know that $20 billion went through financial institutions last year. And we know that there's only a handful of banks that are acknowledging, or financial institutions that are acknowledging banking cannabis. So what does that mean? That means it's flowing through either quietly into financial institutions or without their knowledge. And we're seeing more and more BSA, AML audits that are uncovering hidden cannabis deposits. And then you've got findings in your program. When we have regulation, we believe that the federal regulators, because they're going to be focusing on enforcement, if your institution could say, we don't bank cannabis at all, they're going to say, great, prove it. And you better make sure you've got BSA, AML software that is really fine-tuned to be able to flag anything that's out there. I believe you got to do a lot of training with your staff, because if you make the risk statement that you don't bank cannabis and have a policy statement that you don't bank cannabis, and then you're found with some weaknesses there, then that's problematic for the institution. So the place to start is monitoring, obviously, suspicious activities. Some people use their BSA software very well. Some people have deficiencies in it, in how it works with a core system. But it's important that you've got a good flagging system, can identify structuring, the suspicious activities of many people depositing into one account, many deposits but little withdrawals, unusual spikes in deposits or withdrawals. I would add one that we're seeing missed a lot is those companies that shouldn't be depositing a lot of cash, that are depositing a lot of cash, probably structuring it so it may not come under the radar. Your branches will know who these people are, and they may be marketing companies or IT companies or these professional services companies that shouldn't be depositing cash, because that's how a lot of cannabis businesses have set up, to have an alternative business type related to them that are depositing the cash in the system. And again, if you really train your front line well to look for these risks, then you're going to be better at keeping them out of your institution. And again, when you go through a regulatory exam or an independent audit, we know it makes a difference on how you found the cannabis deposits. If you self-reported, great. I mean, the regulators are going to want to see that you found it, you dealt with it, you took appropriate action. If it's an independent audit, or BSA AML audit, and you found it, then there's some weaknesses or control issues that you've got to address. If it's a regulatory exam, we all know that's bad. And so it's important to really take an intentional approach to this, because again, 35 states, 20 billion of legal cannabis, much more of illegal cannabis that's going through the financial services industry. Don't let it be your institution. So there are prescribed measures for closing the account. They're not that much different than how you would close any account. You send a closure letter. The difference is you've got to file a marijuana termination SAR. If you have multiple marijuana termination SARs and you are not banking cannabis, you might look at the front end of your system to understand how they're finding their way into your institution. But the critical thing is document the action you've taken for regulators so they know you're on top of it and you're making the appropriate decisions.
That's great. Thanks, Andy. And we're near the end of our half hour. Like I said, we'll stick around because we do have some questions coming in to answer. But before we do, I just want to make two quick offers to you. One is no matter where you are on the spectrum of, wanting to bank cannabis or learn more about it, or wanting to prevent it from coming into your system, or maybe you're already active. We're happy to do a free consultation with you, talk to you about the specific risks, rewards, and best practices for your bank, and help you get framed on what to expect with coming regulation, and how you can be ready based on your own objectives. And if you already have an existing or proposed cannabis banking program, we're also happy to come in and provide a free assessment and make some recommendations. That's free. You have no obligation, but we have done this with several financial institutions, and we find that a lot of times it just kind of organically leads to a way to work together. But even where it doesn't, we're really focused on providing value to you and not wasting your time. So like we said, whether you're trying to keep it out of your system, whether you're in the risk profile where you want to get ready when the regulations are deployed, or if you're already active or you have a proposal to go active, we work across that entire spectrum. And especially in this last kind of go phase, that's where we can bring other experts and resources to bear, so that you really have a program that is not only safe, but that can scale safely to become profitable. And that's where NatureTrack and Simplify come in. So with that, I'm going to go to a couple of questions we have here. So first one, Andy, with such a narrow Democratic majority in the Senate, why are you confident safe banking can pass?
Yeah, it's a great question. And the question is really, are you confident that the Republicans won't filibuster and prevent from passing? It's important to know that safe banking had the votes, bipartisan votes, to pass in the last Congress. It just was not going to be delivered from committee from the former Senate banking chairman. But there are the votes to pass it. We've been in close contact with senators from Colorado, for example, one of whom is no longer in office, but was the sponsor of the Senate bill. There are the votes to pass it. And there are pressing needs, because it does nobody any good to have all this legal cannabis out there and not be able to go in the banking system. Regulators want it, law enforcement want it. California Department of Agriculture is pressing for emergency banking powers. So there is a lot of pressure and a lot of incentive to be able to pass it. And there's also a lot of tax revenue that can be had by passing it. And the tax revenue is desperately needed right now.
Great. Next question. If our bank wants to be ready when the regs are rolled out, what should we be doing now?
Yeah, I would develop a plan. First of all, there's a lot of stakeholders in your institution that need to agree to the plan, from directors and executive management to risk and BSA. So that takes some development of a plan to be able to present all of that to them. And we can help with that plan, identify all the risk areas, help with the risk assessments of the program. But that's where I'd start, is a risk assessment and a plan, leading to the development of policies and procedures.
Great. All right, next question. I hear of other banks and credit unions that are already working with cannabis customers. How is that going over with their regulators?
So again, it's really difficult to enforce regulations that haven't been written. So there have been no institutions that have been had findings just for banking cannabis. There have been some institutions that are banking cannabis that have had AML BSA findings for deficiencies, but the regulators have been in a wait and see mode. Since the beginning of this, you had the Cole memo, it was rescinded. So the regulators are waiting for that guidance to be written. So they have not been active enforcement. And the state regulators, most of the states really want there to be banking services. And so they're encouraging the regulators to not do that, to not just enforce because a financial institution is banking cannabis.
Great. And we have another question here. Do you recommend a separate MRB risk assessment, or can it be part of the overall BSA risk assessment?
It's a great question. I mean, I think it can be done. We've seen it done both ways. So I don't think there's a magical answer. I think what you need to do is make sure your risk assessment, the way you address your risk assessment, is going to cover all the inherent risks that are unique to the cannabis businesses. So we can walk you through that. When I say walk you through, help you create a plan, do an assessment, that's free of charge. You may or may not decide to use us independently, but we can walk you through what we believe needs to be in a risk assessment. We've got a digital vault of really the soup to nuts of cannabis banking from a documentation standpoint, and we're happy to let any institution go through that and get an idea.
Yeah, that's great. Okay, I've got one more. If we, if we wanted to meet with you and/or wanted to see a demonstration of some of these technologies you mentioned, what do we do?
Reach out to us via our website, hdcompliance.com, or to a.montgomery@hdcompliance. You can call me on my telephone, 760-399-2322, or we're going to send you out an email after this. It has all that information, so it makes it easy to contact us.
Yeah, that's great. Okay, we've got another one that came in. For those choosing not to bank MRBs, would using a good AML BSA software with alerts being generated usually suffice in finding possible MRB customers?
We've seen, yes, it will help. We believe you need to go beyond that in terms of training, because we've seen that there are limitations to that. There's certainly some that we think are better than others. And there's some core systems they talk to that are better than others. And you probably have experience with that. So we just know that there is a lot going through institutions right now that are not being recognized. We know that for a fact.
Yeah. Yeah. And I would just elaborate a little bit, because we've worked with a few financial institutions on this. It really starts with, first is to go back and audit your deposits portfolio. And
Right.
we have some methodologies that we can advise on to do that. And that gets you kind of a baseline, and it may uncover some issues that need to be dealt with. But then it's to have ongoing monitoring, a policy around the ongoing monitoring, as well as the practices that line up to it. And it can be done. And so certainly the software plays a heavy role and does a lot of the heavy lifting there. But it's a larger framework that we recommend to be in position for that, upcoming regulatory exam. Okay, so I believe that's all the questions we have, unless one comes in here late. I just want to reiterate what Andy said. We appreciate all your time, and we're going to be sending some follow-up to you, to kind of reinforce some of these offers, give you our contact information, even give you access to a recording of this webinar, should you want to share it with any of your colleagues. We're available to help, and we always start with that, and not to beat it too much, but it's free. You have no obligation. We can have a conversation, and if it makes sense to work together, we would love to work with you. So with that, we're going to close for today and look for the follow-up, and be sure to let us know if you have any questions. Thank you.